What is up, everybody? In this video, we're going to talk about VWAP bands, volume weighted average price, one of the most popular indicators in day trading, especially futures, and everybody says hedge funds and institutions use them. Do we really know if that's the case? We don't. That's just what people say. I don't know. It could be a myth. Who fucking knows? Because the hedge funds and institutions never fucking show us. And I think a lot of us take this information and just kind of run with it. And then I also got a question. Why do you think VWAP deviation bands are trash? I've heard algos use them. For those of you who know, and that's the thing, do we really know if the algos use them? Do we really know? And we're talking about the successful algos here. We really don't fucking know, okay? So, before I get into this video, I'm gonna piss a bunch of you off. All right, because this is going to be really controversial. Some of you may know that I've traded VWAP bands for years, and then I stopped using them. Why? What happened? Well, I'm going to give you my opinion because you're on my channel watching my video where I create the content that I want to create. I mean, if you guys ask me good questions or I think something can help you guys, I'll make that content. But in the end, what you guys have to understand is I only know trading from my lens of reality. I really don't know what works for other people. And I know that my way isn't the only way. So for those of you out there who are having success with VWAP and VWAP bands, more power to you. Congratulations. Those of you that can find consistent trading or good trading results and it's a part of your system, that's great. Keep fucking doing it. Don't let my video sway you. I understand that there is an unlimited amount of ways to fucking do this shit. All right? However, I've used these things for years and they really never were an integral part of my trading. It was just some shit on my charts that really, it just really didn't make my decisions any better, to be honest with you. And it's not something I leaned on all the time and then got into anchoring VWAPs where you're starting to move the fucking things around. It's one thing when it's there for the RTH session or the ETH session or it's a fucking monthly session and then you can move them around with anchored VWAPs and then it's at this point, which fucking VWAP band is right? You know what I'm saying? So we're going to take a look at this, and, we're going to continue to talk about this. It's controversial, and those of you who use VWAP bands, I encourage you to listen to what I have to say, because I'm going to share something with you guys that you're not going to find anywhere else about these bands and why I just think that they're trash. Sorry to say it, but I'll explain. All right, so here we have some math. VWAP equals cumulative typical price, and if we go down here, cumulative, or typical price, I should say, is high plus low plus closing price divided by 3. If this makes no sense to you, that's fine, because it makes no fucking sense to me. But this is the math behind it. We're going to dive deeper into this. So when you're looking at a bar chart, because I just read raw price action at this point and execute on a DOM. That's where I know how to make this work. So the high of the bar plus the low price plus the closing price divided by 3. So what's the high of the bar? It can be a 10-minute bar or it can be a 3-second bar. And then you divide all that by 3. So depending on what time frame you're on, the VWAP band is going to change drastically because the 10-minute time frame versus a 3-second time frame, second time frame, it's just going to change the VWAP location. So when you have these bars being put in on different time frames, it's just going to fragment the fuck out of the VWAP band. So which VWAP band is right? You see the problem with this? So, and then you have cumulative, which is total since the trading session opened. So I assume they're taking the volume, so that's, market orders hitting limit orders on the DOM. They're taking the actual volume coming into that specific product, and they're throwing that into the math. So cumulative typical price times volume divided by cumulative volume. That's how you get VWAP. So They're taking these bars, which again, different time frames are going to fragmentate the VWAP bands. And then they're taking the volume, which in my opinion, that may or may not be a constant across the board. I don't fucking know. But why is that specific math we just looked at any better than any of the other indicators out there? Why is it that specific math that's taking bars and volume and mush mashing it together and creating a squiggly line any better than any other fucking indicator? Is it better than a moving average? Well, a moving average is just taking the fucking price action and it's not using volume. There's other indicators that actually take price action and volume and mush mash it together, like a VWAP. Why is it that specific formula out of all the formulas out there? Why is it that's the one? Here's what I think. I think that when you're using these indicators, pretend you have a bunch of furniture in your fucking room. That's the information you have. You have a bunch of furniture in your living room. Is somebody going to come and sit down on the couch or the chair? And how many people are going to come in and sit down on the couch or chair? How many people are going to come into my living room and how are they going to sit down? Well, I'm trying to speculate that by looking at the furniture in my fucking room. Well, I think when you take and use technical indicators, all you're doing is rearranging the fucking furniture that you already have. All you're doing is taking the information you have now and you're just rearranging it. Like, I can just look at price action instead of a VWAP band, and it's, I wouldn't say it's saying the same shit, but it's kind of saying the same shit. That's all it is. Like, there's nothing in these fucking indicators. Like, the market's, it's not like it's like, oh, there's the VWAP band, we're gonna have to fucking roll it here. How does a fucking market decide that? When you got fucking millions of people trading this shit, and they're all fucking leaning on different fucking indicators. Is that the one because that's the one most people use? So hypothetically, it's a fulfilling prophecy? Is that what it is? I don't think it is, because most of the volume is not coming in from retail traders using this. This is coming from these high frequency trading machines. You know, these market making firms and these high frequency trading machines, they're the ones who are putting in the most volume. And as we continue this video, and this is where you should listen very carefully, I'm going to start to put a bunch of puzzle pieces together so that way you understand why I think VWAP is trash. It's not just trash because I've traded it and it works sometimes and it doesn't work other times. I mean, the fucking band can get chopped and murdered and then it just like it doesn't work. Yes, I know some of you guys like to use them on multiple time frames and try to get them to align. I think multiple time frame analysis is fucking fantastic. Something I like to use because like it's good to know where higher time frame participants are coming in. And I understand how some of you guys like to use that, especially there's a lot of people who are Nadro traders, and that system uses a shitload of VWAP bands on different time frames and using it to time in the trades. That's part of the system. So there's guys that come from there to me or vice versa that like to use them. And again, I'm not the shit on it, but I'm going to tell you why it doesn't make any fucking sense to me. I think you're just taking the same furniture you have and just you're rearranging it. There's no predictive power in that, in my opinion. And in the many years that I have used it, I mean, to be honest, it's just kind of a 50-50 crapshoot. And I've noticed personally in my trading, most of my trading decisions were not being leveraged with bands. So it's like, dude, it's like, oh, it worked this time. So like I'm trading and like out of the fucking 10 trades I take, maybe 2 of them worked because the VWAP band just happened to be there. That's the thing about indicators. There's times where they work, where they just happen to be there. But most of the time, well, half the fucking time, they just don't fucking work. I've used stochastics a lot. Even those fucking things, man. They fucking rotate with the oscillators, but sometimes it just blows out and it gets pinned on overbought or oversold. And a stochastic oscillator is just this math where you're, again, taking the furniture in the house and you're just rearranging it. And it's taking the price action. Like, why not just learn how to read the price action? Why take it and rearrange it? Why not just learn how to read it at the source? Like order flow at the source or the fucking price action at the source. Why do I need to take that and rearrange it? That, in my opinion, it just doesn't give you any edge. It doesn't. And here's where I think why you could use it is, like, maybe you can't really read the price action, or you've never taken the time to learn how to do it, or you don't understand it enough, that maybe rearranging the furniture in the house, maybe that's just an easier way for you to see it. Because there's a lot of things I see you guys don't see. It's like watching a magician do a magic trick. It looks like real magic when he sawed the lady in half to all of us, but until he shows us how the trick is done, it looks that way. But once we see how the trick is done, well, we can't unsee that, and now we know how it's done. So every time we see the lady get sawed in half, we know exactly what's going on. So trading is very elusive because we're trying to take this really goofy information on a screen and trying to make sense of it as humans. We are taking this foreign fucking shit of these squiggly lines or these bars that go up and down or these numbers that are hitting each other. And we're taking this really alien language, if you will, and trying to make sense of it to try to speculate into the fucking future, to try to guess what might fucking happen in the fucking future. And whatever you can do to be able to see it and make it make sense for you so you can actually find some sort of edge, that's when these things, I think, are useful. But again, I just don't think these things really give any fucking edge. I don't really think any indicator, leading or lagging. What is a leading indicator? No, dude. It's all taken information from the fucking past. It doesn't fucking know that something's about to fucking happen. None of us know. There's just a high probability it might happen. And if you have enough experience and know-how and you just see how it ebbs and flows, you can just kind of see that. Even more so if you're a scalper. Because, again, it's a lot easier to predict the next few seconds than the next minute. Because I'll tell you, man, for me, scalping is just the real saving grace. Especially as the VIX gets lower, it's very difficult to push trades. Bigger holds, but I mean, they do come around every now and then. So as a scalper who's attempting to predict just the next few seconds, that's a lot fucking easier to do. But beyond that, it just the price action can just change into the most randomness. Like, what looks like a good trade, I get into a good trade, the price action can just shift in a way that all of a sudden the market is telling me this is no longer valid. I can have an A+ setup, and due to the nature of the price action, that A+ setup may not go to target, and it may no longer be an A+ setup after I get into it and as it forms and does whatever it does. Because no two setups ever really looks the fucking same. They all have nuances, and they're all slightly different. While they may have a similar look, they're all slightly different. So that's going to transpire into your indicators like VWAP bands. Like, it's just not, sometimes it cleanly bounces it, but a lot of the times it doesn't. It breaches it, it hovers behind it. And I think a lot of these HFT firms that are accounting for a majority of the volume, unnatural volume, and we'll explain further in the video. Those HFT firms coming in and creating unnatural volume, I don't think they're using this shit. I really do not think they're using enough. And the reason being is I've looked at a DOM for a very long time. I've watched order flow for an extremely long time. So let me share with you guys my journey on how I've come to the conclusion that VWAP is shit, as well as cumulative delta, more so if you're a futures trader. So I am working on a project to showcase everything I'm saying with like actual evidence of what I'm about to tell you. That's going to be for the coffee members. So if you want to join the coffee, there it is. You get to see me trade. You get to hear my narrations. And there's just hundreds of hours of shit, hundreds of hours of footage. I'm always uploading. And you get to hear the most cutting edge knowledge I have, like using equities and stuff for correlation, which I've barely talked about on this channel, but I've been talking about it for a month and a half or something on coffee. So if you want to know more, that's the place to be. If you're really interested in what I'm doing, how I'm doing it, you want to learn the way I scalp, where the real edge is for me, that's the place to go. So I'm going to summarize what it is without actual visual aids that I'm going to give to the coffee people at some point. I've been filming it for a few weeks and it's a long video and I'm giving it to them. However, I'm going to tell you guys what the summary of this is, and for those of you that want to see proof in the pudding, that's where it will be. So I've talked about this a lot, and now I have a free video, this one, that I can start referring people to. So as the VIX slowed down, things got harder for me. And I started using correlations. Some of you guys probably remember when I started getting into correlations. I talked about it in these videos here. I recommend you guys go watch that. I noticed that a lot of what I was doing in ES was happening in NASDAQ and Russell. And I noticed that if I could get NASDAQ and Russell to agree with ES, that made the probability or the quality of the trade a lot fucking better. Versus when they kind of weren't agreeing. NASDAQ and ES almost always agree to some extent. But if it wasn't for me going in the correlations as the VIX got lower, because we were above 20 for a few years, and there's just a lot more volatility, and when there's more volatility, more volume is flowing in, so there's more people like us trading it, more natural volume, if you will, because most of the volume coming in these futures markets are not human. The market orders, the limit orders, it is not human volume, most of it. You guys have probably heard that HFT firms account for 90% of the shit. And while we don't have proof of this, as I've continued to look at order flow on a DOM for a really long time, I start to realize that really is the case. So I noticed that these markets would work together and better together, and Russell just being small caps, it doesn't have the Magnificent Seven in it. It doesn't have Apple, Nvidia, Meta, Microsoft, Google, Amazon in it, Tesla. Russell is comprised of 2,000 small caps, but for some fucking reason, I've showcased it over and over and over to you guys, more so on the coffee too. But here I've done it. I showed you the videos. But for some reason, when we get an order flow event, then ES and NASDAQ, just a sudden pop and sweep, it happens in Russell. What the fuck? It's not attached to those indexes. There's the stocks. Those stocks aren't in it. Why is that happening? Right? Maybe it's because they're all on the CME exchange. If you subscribe to the CME exchange to trade NASDAQ and ES, you have access to Russell. So the chances are the market makers in ES and NASDAQ are the same market makers on Russell, right? To me, from my research, it seems like a lot of the big HFT firms are also market makers. Would you look at that? So this is all theory, right? But there are facts here, and that is Russell moves with the other two, a non-correlated product. So I've always been curious about equities. I've always been curious about stocks. I've kind of always wanted to trade them. And now I'm getting my feet wet. And as I look at stocks, I'm like, holy fuck. The same setups that work in ES that I realized work in NASDAQ and Russell, that if all three agreed, made the trade better. Well, if I watch the Magnificent Seven, it makes the trades even better. If I hit shit right, sometimes I make stupid fucking mistakes. Don't get me wrong. Like, I am not a pitch perfect trader. I am always attempting to get better. I make fucking mistakes. I do things that I'm not supposed to do. Sometimes I'm really tired and I trade like shit. Some days I trade perfectly. Sometimes I just get blown out doing what I'm supposed to do, which is going to happen. So I do make mistakes, and it's not my system's fault. It's me as a human who's always, I'm just never going to pitch a perfect game. I just have to get as close to perfect as possible. And, over time, as I gain more experience, I'm going to get closer to that, but I'll never truly trade perfectly forever, I'll get closer and closer to that as time goes on, and I continue to work for that. But I just noticed that these fucking equities are just as choppy, because you probably notice how choppy futures are. Just as fucked up. Thought, hey, maybe equities is easier to trade. I am still interested in trading the individual names. However, I think using them as correlations to my futures trading is allowing me to understand the product before I fully commit to something like that, because I'm very careful on this journey. I just very slow and growing size, and just very careful about what I do, what I look at, looking at new correlations. I don't want to look at too much new shit at the same time. Talk a lot about this in this video, how traders look at too much shit and you need to stick to one thing for a while. And I talk about stock correlations in that video. So I start to notice, that these equities, if they don't agree with each other, then ES and NASDAQ get really choppy, because trading just the NASDAQ Russell correlation, there would be times where there are these great setups, but then we would get in these abusive ranges where I get shaken out real bad and it's not actually going. And I'm like, what the fuck? Why are these ranges so abusive? Why is it being held like this? It's because of the fucking equities. Now I know. Because the equities will be ripping in all different directions on the Magnificent Seven. There's times where they align and they all agree, and then that's where my setup, or a majority agree, I should say, that's when my setups start to work on the futures market. So when the market gets stuck in these abusive ranges, which have been very problematic for years in my trading, now I'm starting to see why those ranges happen and why they're so abusive, and it's because of the equities. Because they're all in a different cycle in their auctions, and they're all disagreeing with each other and hitting setups I normally would take individually, but since they're all disagreeing with each other and they're cycling back, it's causing this excessive chop in the futures markets, because, well, the futures market is a folder of all of those individual names, right? But I also think the individual names, there's times where they break out and run on their own free will. I'll see Apple just go and the rest won't, or Microsoft or Google. But there's times where they even tend to kind of work with each other. So, because if you've ever looked at those heat maps, or if you look at Yahoo Finance and listen to the talking heads of Wall Street, if there's a down day in the markets, a big one, chances are they're all down. The tech sector, if you will, they all seem to go up and down at the same time. If there's a good day in the markets, everybody's almost up. If there's a bad day, almost all of them are down. They seem to kind of just do their thing. Now, there's times where they disconnect, and I've talked about this before in correlation videos. There's times where, like, Russell will disconnect and it will run, and ES and NASDAQ won't be agreeing with Russell. There's times where NASDAQ and Russell go two different ways, and ES kind of floats in between them, which is interesting. And I just don't think anybody can really, like, understand this shit until you start looking at these correlations like this. Even the non-correlated shit where, like Russell, where they just kind of work together at times. Their correlations isn't shit where, because I don't want to see it all move together. I want to see them disagree, and then I want to see these moments where they agree, and then they all move together. So noticing that phenomenon, I'm like, oh shit. To me, it seems like the entire market as a whole is so arbitraged with algos that the entire market as a whole, it moves together. But why? It's because of these micro things on the smallest time frames, because I look at the smallest time frames. I look at 3-second charts. You know what I'm saying? That's a very small time frame. I look at this shit tick for tick. So I have this level of understanding that higher time frame participants who don't look at such a small time frame don't understand. But what you have to understand is what's happening at the smallest time frame is affecting your higher time frame trades. And this is why you might be having problems. I'm seeing more and more people talk about and complain about how trades just come back and don't make it to target. And I understand why that's happening. So it all kind of just moves together, and that's where the best trades are. And what I've also noticed is as the VIX starts to lower, ES really gets stuck on the spread a lot. It gets stuck in a 2-tick, 3-tick range. And it is sometimes it's almost impossible to get filled, and it's almost impossible to get out of the trade. And for a hot while there, I thought that the market makers and all that knew I was trading and they were trapping me on purpose because there was no volatility, and there are less volume and volatility. As the VIX goes down, there's less participants. So for me, I felt like at some point that they just knew. Like, I'm like, fuck, I keep getting trapped. Like, I can't even get out for a tick if it gets bad enough. And looking at a 3-second chart, like, ES will just get stuck in these areas where you can't even pick up the spread. And we recently went to a VIX 20, and I had a record day for the year, 2 record days of the year, kind of a week apart. As the VIX went up, now it's back to a 14, and now ES is a bit problematic. Volatility really is key. And if the volatility gets low enough, I'll start to fuck around in NASDAQ, because it's just a lot easier to pick up a tick or a break even or 2 ticks if I think I'm wrong, versus ES. If the volatility is low enough, I can't even get out for a break even at times. And then a trader is only as good as the volatility that's coming into the market. I think that market conditions do dictate P&L. They do, because if the VIX is high enough, I'm doing better. We need volatility. We need volume. And ES just gets stuck in these crazy ranges, and then it just blows out. And there's nothing in the order flow. There is no picking up in the order flow. There's no more buyers hitting, and then it just blows out. Like, there's no, like, pick up in the order flow to let you know it might go, in futures at least. And if you look at ES, I mean, typically you would want to see more and more heavier buying, hitting, and then it goes. No, it just goes. It just goes real sudden, real fast. And there is nothing that tells you that that's probably going to happen. And a lot of the times the limits are canceling. A lot of the times the limits pull and cancel, and the market goes up. And what's being advertised on the limit orders is not what's actually being traded. So it's going up on thinner volume, and it's just very sudden. And it reminds me of my very brief stint with crude. Crude would do the same thing. It would have heavy order flow, but it doesn't move. And then when it popped up and moved, it just did it so suddenly. There was no like anything in the order flow to let you know. It just goes. So what I started to notice is ES moves with NASDAQ. It is so connected to it, especially today of this recording, 4/29/2024. If NASDAQ is stuck in a 4 tick to 8 tick range, ES is typically stuck on the spread. And I encourage you filming two of the DOMs side by side, NASDAQ and ES, and slow it way down. I'll be showing this footage in the coffee thing when I release it, and then I'll make sure that there's easy access to that video so that way people don't have to dig for it, because some videos you have to dig and scroll to find. For those of you who want to know, I'm going to be putting together sort of a playlist in the coffee that these are videos you guys need to watch right now, and that playlist can change over time. So I noticed that when NASDAQ would move, ES would move, or it's not tick for tick, but like if NASDAQ jumps 2 points, then a little bit of order flow would hit the offer. If NASDAQ jumped, 4 points, then ES would go up a tick. NASDAQ got stuck in a 4 tick range, 0 order flow will typically hit ES. If I'm trying to work a limit, I'm not getting filled. Like, what's interesting is I can't get fucking filled if NASDAQ is not moving. So, like, there'll be times where NASDAQ's stuck in a 4-6 tick range, and there is virtually 0 order flow hitting on ES. Maybe a 1 lot here, and that's it. It's the moment NASDAQ just runs that a little bit of order flow comes in. So, to me, the way the order flow comes in on ES is not natural. Like, if there were human traders in a majority of this order flow, these market orders, I should be seeing some spillover. I should not see this like very robotic order flow coming in the sense that there are specific prices where not even a 1 lot will hit the next tick above or below. There are very specific prices, especially in ES, where a 1 lot will not hit the fucking offer or the bid below, depending. And you will see time and time again, ES gets stuck on very specific prices and rotate those very specific prices to a very specific tick. And it'll come back to it and it'll do it again. And you never see a 1 lot hit the tick below. So that's how I know a lot of the volume coming in is not human. And it's only coming in, the market orders for the most part are only coming in because of NASDAQ moving. So here's the thing. If you look at a Bitcoin DOM on the CME exchange, because if you have CME data, you have access to Bitcoin futures. And what you'll notice is the bid and offer, there's a huge spread, by the way. It's not tight. The bids and that market goes up and down on 0 market orders. 0. You'll occasionally see a 1 lot come in, but Bitcoin in the futures market goes up and down, and you'll see these limits pull in a very robotic way. And the market is just going up and down on limit orders canceling with no market orders coming in. Bitcoin futures is on the same exchange as Russell, NASDAQ, and ES. So the chances are the market makers who make ES and NASDAQ are making Russell and Bitcoin. The reason the Bitcoin futures DOM is moving with 0 order flow is because of the underlying asset being actual Bitcoin being traded on actual Bitcoin exchanges. And the futures market, it is only moving because of the underlying assets. So if ES is moving because of NASDAQ, like ES is not moving under its own natural order flow, and I explain why and how a lot of it is robots coming in, then that must mean NASDAQ is not moving under its own order flow. So if Bitcoin futures moves due to the underlying assets, then NASDAQ is moving because of the stocks. Yeah, no shit. It's so obvious, right? It's so fucking obvious. But here's the thing. It's obvious because it's an index of the equities. And then I went and looked at old COVID footage because I still have recordings from then. And I noticed the same fucking shit was happening. So I start to realize that the order flow in ES is complete illusion. The equities are what's moving NASDAQ, and that Magnificent Seven, because NASDAQ influences the fuck out of ES. I mean, it's you. Most of you guys who've been around long enough should know this at this point. And I encourage you to record them side by side and slow it down so you'll see that. But even the order flow in NASDAQ is not natural because there'll be times where the bids and offers will pull for 3 ticks. And if you slow NASDAQ enough, you'll see the offers go up like 3 ticks, 4 ticks at a time. And the bids will chase it and no market orders are hitting. Why are the bids and offers pulling up and down like that together with no market orders hitting? Well, it's basically doing what a Bitcoin futures DOM does. And it's because the underlying assets, the actual equities that are coming in, are what's moving NASDAQ and ES. And since it's a folder and index, you have to get most of those equities to agree in order to get a cleaner movement in NASDAQ or ES. Because NASDAQ and ES are so brutally fucking choppy. And that's because the equities aren't agreeing. They're going against each other. And since the Magnificent Seven has the most weight on NASDAQ futures and ES, then when they agree is when you get the better moves. It just makes sense. And that's, well, not only does it make sense, but that's what works for me. So I come to realize the market makers aren't trapping me. They're not like, oh, Fat Cat's here, let's fuck with him by a tick. No, that's not what's happening. It's because of the whole market is moving and syncing up and desyncing, and then it moves. It's kind of like a caterpillar walking. You'll see a caterpillar, like, it'll go forward, and then its ass comes up, and then arches its back, and then it goes forward, and then it arches, right? And then it goes forward. That's what's happening is the market as a whole is desyncing, and then it sinks, and then you get the cleaner moves in NASDAQ and ES. So the thing is, if the order flow is not natural in ES, and if it's that order flow, those market orders are only coming in because the NASDAQ is moving, and NASDAQ is the same thing. Market orders are only coming in because the equities are moving. If those market orders coming in are only coming in because the equities are moving, then that order flow is not, it's illusionary. So the thing is, market makers have to make a market. They have to provide liquidity, which they do. And when the market blows out or moves or what have you, since NASDAQ and ES are legacy markets, they're old school markets. I mean, it's the S&P 500. It's the most volume comes in, I think, to the ES, if I'm not mistaken. It's a legacy market. The spreads are just going to be tighter than a fucking Bitcoin DOM that I believe premiered in 2018 or 17, one of those years. That's when it came on the CME exchange, so the spreads are so fucking loose on that fucking product. You're talking, what, 12 ticks a spread or some bullshit? The spreads are pretty fucking tight on NASDAQ and ES. NASDAQ will spread by a tick at times. Same thing with Russell, where there's nothing there. But those market orders that are coming in and sweeping the limits, that's not humans doing that. And it's these machines, and it's only moving because the underlying assets, the equities, are moving. So therefore, since market makers got to make a market, since they got to have limit orders there, and they can't just completely make it go to zero, those have to get filled. And what's interesting is, like, Jigsaw has a power meter, which basically shows buy orders versus sell orders, essentially cumulative delta minus the math. It's just showing you the raw fucking market orders. And anytime there's a micro range, because I trade a lot of micro structure, anytime there's any sort of blowout, the delta or those market orders are almost always balanced. It's almost always even, and it only gets unbalanced after the blowout happens. So my theory is, well, the market's obviously going to move quite a bit at times, and I believe that the market makers, since they have to make the market, they're constantly sort of trading into themselves and making it go break even. So therefore, that's why the market orders seem to always be balanced before a blowout. Now, if you're looking at a 3-minute chart and you're looking at a cumulative delta, yeah, it'll drift one way or another overall. But as somebody who looks at microstructure, a lot of times it's balanced. If you fire up a jigsaw DOM and you just have your market orders power meter on, it's almost always balanced for the most part. It gets imbalanced after the breakout starts to happen. That's when it gets all fucked up. When the breakout is happening, but not usually before. So that's kind of why I think Delta's shit too. Because sometimes it can go up all day on ES and then ES is going down, but sometimes it works together. Like sometimes it works, sometimes it doesn't, you know? So since the market orders coming into ES are not natural and it's only coming in because the other markets are moving, and it literally is only coming in because it's NASDAQ and the equity. I think your VWAP, this right here, you're taking math, and if you're using a VWAP on ES or NASDAQ or any futures product, in my opinion, at least these two, which is probably what most of you guys are trading. I can't speak on behalf of bonds or crude or any of that other shit. But if you're using this math, you're literally like it's taking volume from a product where the volume does not come in because of humans. Yeah, sure, the equities, you know, the Magnificent Seven may have the same thing going on where a lot of that volume is unnatural. But what I know is when they sync up, they all move together. And I really think looking at multiple markets, it's definitely the better indicator. It's the best indicator, in my opinion. So you're taking math right here and you're plotting it on ES, and it doesn't matter because that cumulative volume, that volume it's taking and adding into this math formula doesn't matter because that volume is only coming in because of other products moving. That is it. So I know that's a bit mind-blowing and shit, but maybe VWAP is more solid in equities where the volume is more natural feeling. But this is why I think VWAP is trash, or any indicator really measuring any form of volume in the ES, because that volume is only coming in and and especially now, these markets are more synced up than ever before. I mean, maybe with the VIX is high enough, they start to kind of do their own thing, but my God, especially Russell, these things are moving so robotically together. It's crazy how it is. Maybe this is market efficiency, but market efficiency, I mean, the markets are still moving, so there's still like edge because the markets still move. You just have to look at it differently. And I think a lot of algos are arbitraging a lot of this shit this is why it all kind of moves together at this point. So I don't think, and yeah, you could use maybe like nicey tick, but I don't think that's necessarily a good idea because, I mean, for somebody like me who looks at microstructure, that indicator's too broad. It's measuring too much bullshit. That I need to see actual price action. Like I said, I don't want to take my furniture and rearrange it. I rather just read the price bars at the source than rearranging the furniture with all this other shit. And I think you can make things too broad that it's like the difference between not having gloves on your hands and having gloves on your hands. If I have gloves on my hands, I can't really feel shit as well. And I think taking a nicey tick indicator or some shit like that is that now I got these big gloves on my hands and I can't really feel it as I would by just looking at everything in the rawest form possible. So again, this is why I think VWAP is trash, is because ES does not move under its own order flow. And if you guys watch this video right here on why courses suck that I made, it's pretty popular. You know, I talk about how, you know, some of these courses are made a long time ago, and, you know, market conditions shift, market conditions change, and a lot of what's shown in those may not be valid anymore. And also the guy who creates the course, the gentleman who presents the course or what have you, he's gained more knowledge and understanding, and most importantly, experience with the markets. So does his opinion of how this shit works, has that shifted and changed at all? For me, yes. And because of this, I think a lot of my older content, well, certain things that are really years and years ago, certain shit is pretty good still. But there's a lot of things I just kind of don't agree with anymore. Just like reading time and sales. I have not looked at a time and sales in a long time. And I have a video that shows how it works. And it's valid in the sense that it shows you how and why it works. But I don't think a time and sales is going to help you in ES, because the order flow just works unnaturally. Now, maybe something like an actual name, like an equity or whatever, a stock where that's in play that has a lot of humans involved, I think the time and sales may be more valid there. I don't know. I've not looked at time and sales or order flow in equities to really formulate an opinion on it. But all I can tell you is ES, NASDAQ are not moving on natural order flow. They're only moving because other products are moving, but it makes sense because it's an index comprised of these other products. So when we keep thinking, yeah, there's times where I'll see somebody come in and they're obviously reloading on ES, and there are times where you see legitimate large traders come in and do weird shit in the order flow, but you never know what the fuck they're doing, and there's no point in trying to decipher that because you don't know if it's open interest or closed interest. It really doesn't matter. Trying to figure out who's doing what, where, and why, you're never going to know. So if you're not going to know, how does that benefit you? And how does VWAP benefit me if, well, I mean, before I came to this conclusion, I stopped using it because if you leave an indicator on long enough, there will be times it works. But most of the time, my trading decisions were never based on it. It was always price action. It's always been price action. It always has. A lot of people have this misconception that I always was reading order flow, and it was never the case. It was the way it dances and flows on the DOM that I was feeling. And I don't think the order flow on the DOM is useless. I think a DOM is the best way to execute. And if I didn't look at it for 7.5 years, I would never have come to this conclusion. And you guys would have probably never fucking figured this out or known. So if you guys do, if this is big for you, you can always donate as little as like $3 to the coffee or maybe a super chat or something. Because I'm literally taking years and years of experience and explaining something to you you're not finding anywhere else on the fucking internet. That's going to really have you rethink what's going on. And I think understanding why and how this shit works allows you to make better trading decisions or actually find edge, if you will. Where is the edge? You know, where is the edge if this shit doesn't work? For me, it's a lot of reclaiming and slipping, which I showcase on the coffee all the time and I talk about here as well. For some reason that just keeps working, but obviously there's a lot of skill set into leveraging that type of shit. And there's also a high expected value, other stuff happening, but yeah, I just it's kind of mind-blowing if you think about it, but it's like holy shit. You know, that all that market orders coming in are just an illusion for God knows how long at this point. Because even when I looked at COVID footage, I noticed something about it seemed unnatural. And then when I really look back at shit, I'm like, holy fuck, this has been going on for a long time. But again, it makes sense because the stocks are what makes these indexes. And that's what's moving them. So for me, like, the same thing happens across the same products, but getting the products to align boosts the probability of it. I'm already taking something that has a pretty high probability of a hit rate, and to make it even more of a high probability, I want to leverage and get all the equities to hit at the same time. Now, sometimes these things don't have very good risk to reward, like the reward on them are shit a lot of the times. So it's important to hit the ones that have more reward on them, right? But for me, I get pretty aggressive at times and hit low rewarded shit that has a high probability of working. So that is why I think VWAP is trash as well as any other indicator, because now that's the thing. If you can take it and it helps you see shit better, yeah, so be it. If it helps you read price action better, but the volume that's in that math formula doesn't fucking matter if you're overlaying it on the ES or NASDAQ, because the volume that comes into those products on the DOM is not natural. And don't get me wrong, again, the order flow, watching the order flow come in on the ES, because there might be days where it's more natural, or the limits get thicker, or I notice NASDAQ and ES are desyncing a lot. That's good information to have. Information is power. But it's always been price action for me. And that's where there's this misconception that you read order flow. No, it's feeling the price action. And those numbers, the way they're kind of coming in, helps you feel it. And at this moment in time, as the VIX gets lower, it's starting to show how in sync the markets are as a whole. I think as the VIX goes up, more humans step into the frame. I think there's more volume coming from somewhere the fucking else. And it's probably us. It's probably us. And that's when things get a little cleaner and easier to deal with, and you get more volatility, and then you actually will see that one lot hit above or below. But as VIX goes down, it's just the computers for the most part. You know what I'm saying? And I think the markets sync and desync, and I really think these market making firms, when there's a blowout, I think that they start to rebalance, because you get all this chop, so they get back to break even. So if they get fucked on one side where there's a massive run, you have this intense amount of chopping, so it allows them to take these microtransactions to get back to break even, if you will, after a hard blowout. So that's my theory on all this shit. You can agree to disagree, but again, I do have footage to really showcase exactly what the fuck I'm talking about. So that way, those of you interested, I will show what it is. But that's going to be for coffee people. Otherwise, if you don't need to see it, then it's the same shit. All right, I'll see you guys in the next video.